Hello everyone! Today is September 17th, 2025, and I want to talk to you about a major shift happening in the economy that could be a golden opportunity for your money. For the past few years, we've all felt the squeeze of high interest rates. But now, the experts on Wall Street are buzzing with talk of interest rate cuts coming from the Federal Reserve. When rates go down, it's like a green light for certain parts of the stock market. It becomes cheaper for companies to borrow, expand, and innovate, which can send their stock prices soaring. You just need a clear, simple strategy. The big investment firms have been using a playbook for decades, and I'm going to share the basics with you today. First, they identify which sectors of the economy are getting the most attention and money from big institutions. Then, within those powerful currents, they look for the strongest swimmers, the individual companies that are leading the pack. A key part of this strategy is understanding when to buy. Many people think you should buy a stock when its price is low, hoping it will go up. But the pros often do the opposite. They wait for a stock to prove its strength. Imagine a stock has been trading sideways for months, stuck in a narrow price range. The smart move is to wait for it to break out, to push above that old ceiling. You buy a stock because you have a reason for it to go up, and you must have a plan to sell it and protect your profits if that reason changes. Let's start with a sector that is as solid as a house's foundation, building products. When the Federal Reserve cuts interest rates, mortgages become cheaper. Cheaper mortgages mean more people can afford to buy homes, and more construction companies can afford to build them. We have a massive housing shortage in this country, and lower rates will be the fuel that gets the bulldozers moving again. Lower rates make home equity lines of credit, or HELOCs, more attractive, which means more people will finally start those kitchen remodels and bathroom upgrades they've been dreaming about. On top of the housing boom, the government is pouring billions of dollars into upgrading our country's infrastructure. All of this construction requires an immense amount of materials, from insulation and roofing to pipes and paint. The companies that make these essential products are positioned to see a huge surge in demand from both the private and public sectors. If you look at a chart of the building and construction sector as a whole, you can see it. After a period of weakness, it found a bottom and has started a strong recovery, breaking out to new highs. We are going to look at 3 specific companies that are not only leaders in their field, but are also showing technical signs on their stock charts that suggest they are getting ready for their next big move higher. Our first pick is a company you probably already have in your home without even knowing it: Fortune Brands Innovation, or FBIN. This is the company behind some of the most trusted names in home improvement. Their business is deeply connected to the 2 major trends we just discussed: home renovation and the growing demand for smart, connected living spaces. Fortune Brands isn't just making the same old faucets and locks. They are leading the charge into the smart home revolution. As people invest more in making their homes their sanctuaries, FBIN is there with the premium, innovative products they want. From a financial standpoint, this is a strong and healthy company. Now let's look at the stock chart, because this is where the opportunity becomes clear. The smart entry point would be just above its recent highs, around $61.85. Our second company in the building sector is another giant you are likely familiar with: Masco Corporation, ticker symbol MAS. This company's reach is incredible. Its products are estimated to be in half of all American homes. Masco is not just a participant in the home improvement market. It is a dominant force that sets the standard for quality and style. Their brands are so powerful that they have pricing power, meaning they can raise prices without losing customers. The growth story for Masco is tied directly to the renovation boom. With Behr Paint, they have an exclusive and powerful partnership with the Home Depot, the world's largest home improvement retailer. Looking at the stock chart for MS, we see a picture of strength. The stock is currently on one of those landings, building energy for its next move. A smart entry point would be just above its recent high, around $76.35. Our final pick in the building sector is Owens Corning, ticker OC, a company famous for its Pink Panther mascot and its signature pink insulation. They are a major player in roofing shingles and, thanks to a recent acquisition, residential doors as well. Owens Corning is at the forefront of this green building movement, providing the materials that help homeowners save money and reduce their carbon footprint. Financially, Owens Corning is a solid performer. Their recent acquisition of a doors business shows they are strategically expanding their portfolio to become a more comprehensive supplier of building envelope solutions. When we turn to the stock chart, we see a very interesting setup. This long period of consolidation is building a massive base of support. A smart entry point would be just over $159, which is slightly above the recent highs of this consolidation range. A move above that level would be a powerful signal that the resting phase is over and a new uptrend is beginning. Now let's shift gears from building homes to building wealth with something timeless: gold. Gold is shining brighter than ever, with prices hitting record levels. A big reason, once again, is the expectation of falling interest rates. When interest rates fall, that savings account pays you next to nothing. Suddenly, holding a real tangible asset like gold becomes much more attractive. Central banks around the world, particularly in emerging economies, are buying gold by the ton. At the same time, individual investors are pouring money into gold-backed exchange-traded funds. Gold is reasserting its ancient role as the ultimate store of value in uncertain times. For investors looking for growth, there's a way to get more bang for your buck: gold mining stocks. The companies that dig gold out of the ground have what we call leverage to the gold price. This leverage can lead to explosive gains in their stock prices. We are seeing this play out right now. Let's look at two companies that represent the best of this golden opportunity. Our first pick in the gold sector is a global powerhouse, AngloGold Ashanti, ticker symbol AU. This isn't a small, speculative miner. It's one of the largest gold mining companies in the world. They operate a diverse portfolio of 11 mines across several continents. The financial picture here is exactly what you want to see in a gold miner. The company is highly profitable, generating an impressive $1.8 billion in net income. As the price of gold continues to climb, AngloGold's profits are set to explode. AngloGold Ashanti was recently added to the Russell 3000 Index, a major U.S. stock market index. Looking at the stock chart, the strength is undeniable. This is a chance to get on board a speeding train that is just leaving the station. Our second pick in the gold space is a company with a very different and, in my opinion, smarter business model: Wheaton Precious Metals, ticker WPM. Wheaton is not a mining company. Instead, they are a streaming company. They provide mining companies with upfront cash to help them build or expand their mines. This is a brilliant business model. The financial health of this company is pristine. The stock chart for Wheaton Precious Metals looks very similar to the charts of other strong gold stocks. For anyone who wants to invest in gold but is wary of the risks of traditional mining, WPM is, in my opinion, the absolute best-in-class choice. We've covered some fantastic companies today in sectors that are primed for growth, but now I need to give you the most important advice of all. The idea of buying a stock and holding it forever is a dangerous fantasy. Your job as a smart investor is not to be loyal to a stock. Your job is to be loyal to your money and your financial security. You must be an active manager of your own wealth. This means you need an exit plan before you even buy. For every stock you own, you must be able to answer the question, why do I own this? You must then ask yourself, at what point would those reasons no longer be true? Protecting your profits is just as important as making them. A profit is not real until you lock it in. As a stock you own goes up, you need to have a strategy to protect those gains. One simple method is to use what's called a trailing stop. This allows the stock to have normal ups and downs, but gets you out if the major trend turns against you. So, as we wrap up, remember the big picture. The potential for falling interest rates is creating a fantastic opportunity in specific areas of the market, like building products and gold. Now that is a plan you can approve.